banks and miners on the Aussie market are surging. The US markets are coming back, being led by the NASDAQ. And we're going to unpack the charts to find the best trades for the week with Gary Glover. Good morning, Gary. How are you?
Yeah, I'm great, Chris.
It's great to have you in person, sit in a room and talk to you face to face rather than through a screen.
Yeah, so we both sort of dressed pretty evenly today. So yeah,
We did. We got the memo of blue suits. I guess we work in finance in Sydney. That's how it goes. So looking through your report this week, last week you touched on looking at that January, early February as being sort of a minor new high before possibly we go to a low, depending on what that looks like. And that's that pullback. If we look at the NASDAQ, it's not too far from those October lows. So it's had a bit of a wriggle on since last week. How do you read that surge and being so close to the lows?
Yes, I mean the Dow's been obviously the leader off the October low, and the NASDAQ has been the laggard there. Obviously, as you know, inflation obviously impacts growth, and typically growth underperforms in high inflation environments. So, but the thing we've seen this week, Chris, we saw 4 out of the 5 days the NASDAQ outperformed the other indices, and we're just starting to see some of the growth stocks start to move, start to outperform. And so, yes, to me, there's a little bit of a change in character there. I mean, to put it bluntly, we haven't seen that in 12 months. So it's the first time in 12 months that we've seen the NASDAQ and growth stocks, show some outperformance. So literally been underperforming the whole entire time. So to me, there is a little bit of a change there, shifting through the markets. And yeah, but I guess always think that the 2002, 2003 period was, it's a good roadmap, and that change was, that was a bit of a bigger crunch, still a bit of a growth crunch, but it did take a little while for that market to build. It just didn't sort of, didn't do a V-shaped recovery. It took a little bit of, almost like a base building. I know McLaren would sort of call it, building a base, so building a series of higher lows before it really got going here. So I do think that is the more likely scenario here.
So that NASDAQ building higher lows, it's kind of just had that surged out of it, as you're saying, outperformed the other markets. Is it?
Yeah, I know everyone's got the overhead trend line. They're looking at that on the S&P as well. It's probably minor for me rather than major, but to me, I'm just seeing a change in character. I just want to start seeing the first signs of a change. And yeah, we just want to sort of see some high lows sort of starting to build here. Look, it's still a little scattered, the market. It's funny, I was actually reading some Wyckoff. Yeah, I live a very sheltered life, so I'm kind of reading Wyckoff last night and on the bus on the way in here as well in the city today. And the one thing we're not sort of seeing is clean structure in a lot of the charts and even in the volume. So it's sort of quite mixed. So we're not sort of seeing that, burst out on strong volume and then contraction on lighter volume and so it's still a little choppy.
So not clear signals for breakouts.
Not the perfect sort of clean sort of textbook Wyckoff sort of structure yet. So that just tells me that, you're going to get a little bit of a building process there. And if you do look at anyone who does study Wyckoff will see that sometimes you'll go through that sideways orientation sort of building process. So get your kind of washout and then you sort of start to build and then, go from there. So it's got that sort of feel to me that it's sort of trying to build here. I think with earnings season upon us here in the next few weeks, that might sort of cause maybe some of this sort of choppiness ahead here. So might cause, probably going to be some winners in there, some losers in there. So it might cause a little bit, this could be a pretty volatile earnings period there, just because I think there'll be some, in previous years, probably well scripted what's happening, and probably only the variation might be sort of shorter or narrower. Yeah. Whereas I think this reporting season there could be some really big wins that really knock it out of the park and surprise people, and there could be just equally just some big losers that really come up short and get the sort of knocked down. So this could be a tricky reporting season ahead.
Well, that we definitely will see that in February when they just come thick and fast. If we're still looking at the indices, we're looking at the S&P 500. So it's moved more from the lows than the NASDAQ. It's definitely sort of rallied higher. But are you seeing it come back towards a recent low, or what are you seeing in this movement here?
Yeah, it's starting to sort of threaten that overhead line. I think we've probably gone through there in the last couple of days. Yeah, and look, my view is that we're actually probably just the structure there and the strength and the shallowness of that sort of pullback told me that maybe we will pop through. But I still think this is a building process, so maybe we pop out of the high here, maybe go to a slight new high, just sort of above the previous little lower high in there, yeah, and then maybe we'll flash back down again into the range and maybe come back and test the trend line. So sometimes when you break out of that, everyone's looking at that trend line, so it's going to
throw back to it.
Yeah, so you might get a little throwback, come back and retest it. You might even actually sort of sit on it for a while. You might come back and just sort of have a few weeks of just sort of hugging it before we go. But look, I still think it's all the majority of cycles are positive here. Only sort of ones that's probably neutral here. But yeah, the price action's sort of positive, but yeah, still not as clean as I'd like it. So I still think there'll be a little bit of a building process here.
Well, on the Aussie, we didn't come back anywhere near as far. Having a look at your chart here shows that we came 16% down from those highs. Then we sort of retested it, which you covered a fair bit. We had that good, strong rally, pulled back through here, and then a good surge on back, as some of the reports are showing. 9-month highs intraday, 9-month again yesterday. So looking at the Aussie, where to from here? What's signalling to you?
Yeah, look, I guess that overhead line there, which is an old sort of trend line there, might be sort of something to monitor. It hasn't been significant in recent time there. But, when I look at that chart there, it actually sort of brings back memories of 2002, 2003, of the XJO and the All Ordinary shut there. That was when the market kept, in that case there, the market kept rallying back and making a slight new high. So it'd go to a broad, basically be like a big broadening pattern. So it'd flash to a new high, flash to a new low, flash to a new high, flash to a new low. So quite volatile ranges there. So I don't know if we're going to have something like that, but I still think it's a bit choppy. My only concern at the moment is that you got Combank at 109, which is on about 22 times earnings. You got BHP and Rio, flying as well, so almost $50 on BHP, and so yeah, just wondering where the gains are going to come from. So we're really going to have to see some of the other sectors do some heavy lifting there, start to come through. But I think you'll need to see some sort of congestion in those stocks there. So sounds funny here. What you sort of need to sort of see is maybe we go slightly higher here, we pull back here, and those banks and the resources have a bit of a breather, and then some of the other stocks do the lifting. So
we see some sort of maybe new leaders, or those that are feathering actually break out.
Yeah, just some other, maybe the mid cap, small caps are going to have to sort of do a bit, because usually when there's sort of start of a bull market, usually the big caps, and it has been value which has sort of been driven this move here. So big caps sort of move first, and then mid caps will start to flow through, and then the small caps. So I know the smalls, everyone's talking about them at the moment, so as potentially can get going. They haven't really got going yet, but potentially they'll get going. I think you'll sort of see the mid caps maybe first, but yeah, just interesting here. Just struggling to see where it comes from, the gains, but there are some sectors there that are looking okay. I just think some of the leading sectors are looking a little too hot here at the moment. So yeah, just can't see. I can see them going slightly higher, but I just can't see them going a lot higher. So that'll just make it hard for our index to sort of power on here.
Okay, maybe we can try find some themes on Friday when we go through those reports. But we've got the Dow Jones. This is a little bit similar to the Aussie in the sense that it didn't come back anywhere near as much. It has sort of been the leader, as you called pretty well. The average gain throughout that cycle is 21.1%. It's pretty much where it got from low to high. You've got sort of two lines here. So it's coming back towards this February-March low, but do you think we're going to have a little bit more up before we come back into it?
Yeah, I just think it's a little young on the corrective side here. Definitely noticed in the last week here that the Dow's underperformed. So starting to see growth emerge. Some of the old sort of defensive sort of safer stocks, the sort of value stocks are starting to underperform a touch here. So So I think the Dow might go slightly higher here, but I still think we're going to go through a bit of a sideways patch here, a bit of a consolidation phase. Just I say this reporting season ahead will be interesting. Market's had a bit of a decent move here as well, so just going to make the gains sort of harder to come by with. So I just think we need a little pause in the market. Sometimes you need those sort of periods of sort of going sideways. So market really only goes up or down for a shorter period of the time. Not normally there is a bit of a the consolidation phase is normally
a fair chunk of it.
Yeah, it is. So we haven't been through that for a while. So I think we're just probably due for a little bit of a pause.
I do remember many years ago, you and I were talking consistently for about a 9-week period where the ASX just went nowhere for about 9 weeks, 150 points. And that's
we could get that. Yeah, exactly. Yeah.
Well, we move to the trading shares now, which is another part of your report where you pick out the shares that you're looking at this week. There is a theme within that. You're looking at some REITs, the property trusts, and seeing a bit of consolidation in there, which is kind of what you're saying we haven't seen for the index as a whole.
Yeah.
I know you're talking about different timeframes for the weekly here. So what's the appealing part of this ARF chart and this channel, this wedge you've typed in here?
Yeah, so two things on the chart there. We've had a large sort of ABC correction, quite a deep pullback into the range. So come back from close to 520 back to 320. So fairly large percentage sort of correction. And then the last rally off the low has been impulsive. So it's been nice, nice move up, some pretty good volume in that sort of breadth there. And then we've pulled back on kind of lighter volume as well. So the last probably 4 or 5 weeks in particular, been very, very light volume there. So we're sort of, again, going through that little low volume pause period, So, so I think this is pretty constructive. And normally when you sort of see that type of move there, when you're going through a little pause there, you normally break out in favour of how you move into that little sideways move. So we've sort of rallied up into that.
So off the low, congestion, we've got really tight here.
Yeah.
So expect to.
Yeah, so it looks like, it's no guaranteed, but the odds do favour a breakout to the upside there. I just noticed quite a few of the REITs looking pretty positive, pretty interesting. So, saw quite a few in that sector look pretty positive.
Well, another one you've put in here is Charter Hall Social Infrastructure, ticker CQE. So you've got another bullish flag consolidation. So this is tight ranges, 1, 2, 3, 4, 5. If you include the week before, kind of 6 closes really close to each other. How do you trade and interpret that?
Yeah, very similar setup to the previous one there. Probably a little bit more exhaustive volume characteristics. So if we look at that sort of October low there, we saw some really big volume at the low. So almost sort of like exhaustion sort of type volume there. So that's the sort of sellers throwing their hands up in the air, and then that's the buyers finally sort of stepping in. And then we've got a nice rally there again, pretty good volume up into the high there, and then since then we've gone sideways. So it just means we've been struggling to go down for the last 7 or 8 weeks.
So any sellers that have come in, there haven't been too many and they've been absorbed.
Some very light volume weeks in there as well. So, so it just looks kind of constructive to me. So when you sort of see that that sort of sideways orientation after a little advance, so again, the odds do favour a breakout on the upside there. So just seeing some consistency in some of the themes, and it was funny actually. One of my clients, sort of sent message to say, so I was wondering when REITs might come to the party. So,
this could be it. Now we move on to ticker data. This is not a REIT, but we can see it's pulled back. You got the highs marked up here, 1658. Quite volatile in those movements, but eventually rolled over, came down towards the October low with the market possibly a little bit earlier, and then has rallied and sort of come sideways. These green lines give us a bit of a wedge and coming down to a point. But as you're showing here on this weekly chart, we're on the upside of that, still in the consolidation for the price range, but from the wedge, it's on the upside of the downtrend. So what does that mean from a trading perspective?
Yeah, so with that sort of change of character in the NASDAQ, they're just looking across our sort of growth stocks in Australia. So I've sort of been, go back in the report, so I've sort of been long sort of Seek, Domino's, car sales. So just those sort of, those old leaders there, you might sort of say, but are the ones that, Australia's got a pretty strong brand, so we typically go back to those sort of larger ones. But just noticed looking across some of the other growth stocks, just sort of just seeing what's occurring within some of the other ones that haven't sort of kind of broken out or really got going. And I just noticed ticker data has broken out of that range there. So that is constructive and a nice little, had like a 4 or 5 week consolidation there, starting to push up here. The only thing missing here, Chris, is the volume. So normally we'd be seeing some stronger volume pushing through there. So there's our sort of Wyckoff sort of not coming to the fore. You know, normally a breakout through that level might.
You'd expect to see something come in.
So that just means, you know, oftentimes when I don't see volume there, just usually means I don't get a big move. So you can still go up here, but maybe we don't go up at a great rate of knots, and maybe it'll come back and retest later. So maybe it goes up, come back and retest, maybe another higher low. Again, there's coming out of these sort of growth crunches. Sometimes it can take a little while to build. It's just something historically I've noticed. But yeah, positive, but not super positive, I guess, is yeah.
So it could break out and run, but if it does fade back, it gives you an opportunity to reload.
Yeah.
If you see it reload and break out with volume, that could
be. Look, a few little growth stocks I have been looking at there. I'm probably going a bit lighter than I normally would, just because I'm not seeing that, you know, red hot characteristics that I like to see. So, yeah.
Well, another one on the growth side is Megaport. You've covered this a couple of times, which was for good or for bad. You had some trades that it's just in that volatility area down here. So the June pullback, and then we got a higher low throughout October, which is kind of opposite to the market. It was around the same level. Then went sideways and had a bit of trades, but it's broken out against that downtrend line. And the volume, as you're noting from the Wyckoff side, how does that read for Megaport?
Yeah, it's probably a little healthier, the volume there. And the volumes have been elevated actually really for the last probably 6 months there actually. So if you look at the historical volumes there, I know it does help when the price does drop by 3/4. You can kind of trade
$10,000 gets a few more shares.
You can trade 3 times as many. So, but still, I mean, it's still quite elevated historically as well. So even looking at prices as low in the past. So, but yeah, again, just showing some positive characteristics there, starting to sort of build through. We did go to a little new high there, so we've just gone above a little B wave. That's probably my first signs of sort of positivity, seeing a break of that. So I think there are some positive characteristics there. Just not seeing the red hot sort of signal here so far, but definitely seeing some positivity. So just some of the growth stocks are moving. So we've seen some decent moves in Domino's and Seek and car sales and a few others. We've seen some of the biotechs really move as well. So some of those that have probably got some higher growth stories sort of the next sort of couple of years, that they definitely have moved. But just seeing whether the second tier is sort of going to start to follow here is interesting. So starting to move out, break these sort of price congestions. Just not seeing the big volume yet, but so positive, but we do need to see a little bit more here. So that's probably sort of why I've just a little apprehension there a little bit about, sometimes when I've seen this in the past, it just means it's just not quite ready yet. Just might need to use up a bit more time first.
Well, that time could be the country's watching the Australian Open. They're waiting for reporting season to come back Australia Day and get into it. So maybe next week.
Yeah, I think MP1 reports like the 2nd or 3rd week of February. So that that'll probably have a big bearing on MP1, just to sort of see whether they're still burning through a lot of cash or not. So if they can arrest that sort of cash burn and be more sort of favourable on the P&L line, that'll be a bonus for them. So yeah,
that could be some good insights when it's dropped. The announcement's dropped. On the growth side, well, it's a very mature growth one. It came from a small one, rocketed through the ranks from the lower caps, mids, and here it is. Xero, but it's still fallen with that tech side of things. 158 on the highs, tried to retest it, but came back down, and now we're around that 72 region. We're churning around a bit of time here. It seems like it's kind of slowed the bleeding, slowed the dropping in the share price.
Yeah.
What's that congestion? What kind of pattern are you looking for here?
That low too in 2020, I think sort of March there, I thought when this started to break down here in 22, it might have gone all the way back down to there. And if it got back down to there, that would be an excellent, or almost awesome place to be sort of buying those stocks. So sometimes they can come back to where the last drive started. So that's sort of something that I look for, technically as well. But that's a big move. So they don't always come down there. They don't often come down. Sometimes they fall short, like they have done in this case here, and come back near there, just not quite there. So the main thing there is we're seeing two things. They're starting to see a bit of volume. So the volume characteristics are definitely sort of starting to increase here. So definitely has been, that sort of exhaustion there. So looks like a bit of a spring that day as well, Chris. So of the low there. So when you see that sort of wide range and then recovery there, and then we started to sort of build from there. So it's just starting to see a few higher lows emerge in this sort of sideways move. So yeah, again, kind of constructive there. Just starting to sort of edge above the old low as well. So it's been a bit of an arm wrestle so far, back and forth here. But I do like the fact here that we are starting to sort of build a base here. So yeah, this is one that I'm sort of interested in. I think Xero is has really gained a fairly strong market share, but has probably done it at the expense of underpricing themselves a little bit. So that it hasn't really. So that the revenue's growing there, but the P&L's been the concern there. But I think they're sort of talking about getting back to break even in 24 and then start to earning. So once you can get into a strong market share position, then you can start to increase your sort of
move your weight around.
Yeah, and then that's when you sort of can. So this is definitely one there that's got pretty strong growth there. Still got room to grow as well, and more importantly, I think for growth stocks, it's got room to actually, because it's got a pretty decent market share, to start to have some influence on the P&L as well. So get a bit more profitable and drive some earnings there. So it's definitely one to really keep an eye on there. I think this will be one that I'll be looking at reporting season to sort of see what type of impact they're making there on the profit line.
Well, that will be, it'll be great to unpack that. The other one that you've got, different space in a way, we're looking at Viva Energy. So thinking about petrol stations when you fill them up. This is sitting much higher in the ranges than most of the ones that you've put in this week's report. So we're sitting right up there as a bit of a consolidation after the rally from the COVID. So we're looking at, you were talking about Xero hitting down those lows and coming out, driving out of those lows, and then the possibility of coming back and retesting them. We're at the opposite end here. We're still sitting right up and tight. So how do you trade something like that when the market's fallen off? It's kind of been resilient, hasn't it?
Yeah, so you got your classic sort of ABC Elliott wave correction in there, but then you've also got a time-consuming contraction as well. Most important thing is here, if we look at our October 21 and our March 22 highs, which is around that sort of 250 zone, that's basically just sitting on top of the previous two peaks there as well. So we've had a bit of a cool off here, had a correction for, I guess basically a sort of almost a year here, or 9 months is right. So, and the price has held pretty tight, sitting above the old high. Now starting to break up, a bit of volume there last week. So yeah, this is sort of pattern when I see that really time-consuming sort of correction sitting on top of the previous high, struggling to go down. Usually means it goes higher. So I think there's a very strong likelihood there that this will go to a new high here, and I'll probably do it in pretty quick time.
Yeah, well, would you call this? It's hard to call it a market leader, but this is something that you'd be looking at if the market sort of kicks into another leg, whatever that is. If it's maintaining this sort of position, sitting on top of these previous highs, is that an area that you'd pay some attention to?
Do you know? For me, it's like that's like in Elliott wave terms, I would classify that as a large wave 4. So this is a wave 5, so it can go up on light volume, and it can shoot up through the high there. But this will be this could be the last leg up. So
last hurrah.
Yeah. So you got to open the shoulders a little bit, let it run. But you would probably want to see. Me personally, I wouldn't want to see a weekly swing low broken. Right. So I know that right now your stops would be pretty way back because it's a wide range. Mm-hmm. But you hope that this week goes up to say it goes up to 305 or something like that, in a smaller range, and then you use the low for that week, and then you go again. keep bumping up your stop there, sort of to low there. So I just wouldn't want to see. I just notice oftentimes when you see a fifth wave like this, they often don't break the previous week's swing low.
Or when they do.
Yeah. So if I was operating off a low here, like if this was like the first high low, I would give myself a 2-week swing low. If I was like trying to give myself plenty of room. So the low from the last 2 weeks. But if I'm in the last league like this, I've got to be careful. I probably only want to give it, I wouldn't be wanting to go past a 1 week swing low.
Okay.
So just a bit tighter.
That's a great insight to understand how to trade that. Now, we've also had a fair bit of interest. So that kind of wraps out the report for this week. We should talk about what the interest that we've had in the channel, people asking, getting in contact with you. There's been a lot of interest in sort of what this report is, getting access to it, running reports. So we should say we've been in conversation about what we can do, and if whether you've been hit up for trading portfolios, mentoring, the likes. But if people have got comments, maybe to share some ideas with us, because you and I are still putting our heads together in what we do. Is that a fair thing to say? People leave comments below and...
Yeah, leave comments. I know, look, people sort of email me and I get occasional phone call and stuff. So, look, I'm honestly I'm reasonably busy and I obviously enjoy what I do. So people who are enthusiastic about the charts and learning stuff there, it's happy to field emails and the occasional call. A few people have actually asked about mentoring and whether we want to do any education and stuff there. I know it's sort of something that you and I have chatted about, but look, maybe that's sort of something, maybe putting on a seminar or something, one weekend maybe, a bit more time. But maybe it's sort of something we can look at there if there's enough interest.
Yeah, so if you want, you can leave comments below with some ideas and we'll put our heads together and see what we can come up with. But to that point, we probably wrap on the week and say thank you very much for the report. Good to see you in person, and we'll talk again on Friday.
Thanks, Chris.